Your Excellency, ladies and gentlemen, colleagues, friends all, I'm very, very pleased to be able to welcome you today to this side event organized to invest in sustainable development and peace through water, unlocking public and private capital for water and transboundary water cooperation through innovative and sustainable financing. Only in the UN do we have titles like that. Allow me first to thank our co-hosts and partners in this event, the governments of Senegal, the Gambia, Guinea, Guinea-Bissau, and Switzerland, as well as OMVG, represented here, UNECE, Economist Impact, BRL Ingénierie, and the Société du Canal de Provence. As this is a UN meeting, the working languages will be French and English, and there will be translation available on the little sets you have with you. My colleague David Jackson will be moderated together later with Ms. Åsa Knudsen-Sterte from SEB. I'm very, very proud on behalf of the UN Capital Development Fund to be here today and to be part of the organization of this event. The UN Capital Development Fund is the catalytic finance entity of the United Nations, especially, but not exclusively, for the world's 46 least developed countries. As part of our commitment to concrete solutions on financing, we are very, very proud to be working on this initiative in Blue Peace, and we're hoping that today's panel will be able to reflect about the challenges and opportunities for financing water, how we can work together better across sectors and governments in order to create new markets in the sustainable finance field for more sustainable economies, and how innovative financing concepts such as the Blue Peace Bond will help us achieve this vision. With that, I think I've used up my 2 minutes and turn over to my very, very distinguished speakers on my left. David, over to you.
Thank you so much indeed, Morad. Excellent opening comments, and welcome to this meeting. And we're delighted. The standing room only. It's not often you can say that at the UN in particular. So a slight change to the speaking order, and I'd now like to welcome Her Excellency Ms. Rohi John Manya, who has come from the Gambia, which apparently, I'm informed, is known as the smiling face of Africa, but I think every African country must lay claim to that, to be with us on the panel today. So Her Excellency Rohi John Manya has broad experience in different fields, including health, social development, and after her position as governor in May 2022, she was appointed as the Minister for Environment, Climate Change and Natural Resources of the Republic of the Gambia. And on a personal level, I can say that we've worked very closely together, and the Minister is one of the ambassadors for the 34-country Local Climate Adaptive Living Facility. But not only that, the Minister is really one of the ambassadors for African development, and the interventions that she has made at a number of other events really leave a mark. So over to you, Minister.
Thank you. With a time limit, I will just go straight to business. I'm happy to welcome all in this hall, and the topic today is going to be very interesting. As a member country of the OMVG, the Gambia, this is an opportunity right on the spot. UNCDF is not a new friends of the Gambia or a business partner. We've been working closely together in so many aspects. And key among their objectives is to support the vulnerable communities at local levels. And that has been very successful, and Gambia is a success story of meeting that target. Today, we are here to elaborate more on opportunities presented by the Blue Peace Bond. And as member of the OMVG, it is very, 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 very timely for us to tap into this opportunity. And the deliberations today are going to give us a small summary of a SWOT analysis of these opportunities. And there we're here to make sure that we leverage on this opportunity to tap on the potentials present by the Gambia River Basin, which is the OMVG, and make sure that at least we're able to finance the objectives surrounding this to attain sustainable development. The OMVG was set up sometime in 1977, and it was backed up by a very smart master plan. But we will be surprised to say that up to today we are able to finance this master plan because of the cost of finance and also the economic situation of these 4 countries. So if opportunities present to make sure that we're able to achieve that, at least to back up our sustainable development goals, is definitely welcome. And we will not give any chance but to leverage on this opportunity. And I call all those who have such potentials to also tap in investment, investing peace, water, through investing in peace through water. I think this is the right moment for us to do this. Today that we're here attending the Water Forum, I think we have all to take from these conversations today, and I can't wait to receive the brilliant ideas that are coming up to give us the challenges, the opportunities, so that we can leverage on this wonderful milestone to make the best use of finance that are available to achieve sustainable development goals as quickly as possible. The economic environment of the world is definitely challenging, especially for developed countries like the OMVG country. So definitely we are ready to support all in and make this opportunity a realistic moment. Thank you, and hope that we receive a wonderful deliberations after the end of this 75 minutes. Thank you so much.
Thank you so much indeed, Minister. And I think, I'm sure all of you have done your geography homework, but the Gambia River Basin is a very interesting river basin. If you were to look at it on your cell phones, of course not when any of the speakers are speaking, you will see the breadth and depth of this river basin and how important it is to manage it collectively and sustainably. And that's why the initiative of Government of Gambia and the other countries to join together for collective management and investment for one river basin is so important. And it's not as easy as it sounds, but we're going to hear today the progress that has been made. So I think just to inject a note of reality into the conversation, have in your minds the Gambia River and that Gambia River Basin as this conversation proceeds. And with that, I'd like to introduce our first speaker, Ms. Usha Rao-Monari, Undersecretary and Associate Administrator, Undersecretary General and Associate Administrator of UNDP. Ms. Rao-Monari has over 30 years of investment experience and has held several senior positions, particularly in the infrastructure area. She has previously served as Senior Advisor to Blackstone's Infrastructure Group, as Chief Executive Officer of Global Water Development Partners, a Blackstone portfolio company, and has held several senior positions, noticeably as Director of the Sustainable Business Advisory Group at the IFC. So, perfect curriculum for this meeting. It's an honor to welcome you to our panel and give you the floor for opening remarks. The floor is yours.
Thank you very much, David. Thank you, Murad, for inviting me for this very, very important session. Excellencies, ladies and gentlemen, it is my true pleasure to be here because I'm very excited to join the event with our partners during this milestone occasion of the UN Water Conference, a conference that occurred 47 years after the previous one. So I believe that what we do here, what we talk about here, and all the threads that we gather during the conference will create what I hope is the great reset on the water sector and financing the water sector. At yesterday's opening of the conference, you would have heard the Secretary General call for reforms of the global financial architecture to increase investment in sustainable development. It's a call that's more important than ever to achieve the SDGs, in my opinion, particularly SDG 6. Our current financial ecosystem, though, is still based on the old Bretton Woods system. Nothing wrong with the Bretton Woods system, but there's some who think that maybe it's outlived its time. And it just simply doesn't reflect the realities of the challenges that we're facing now, of which finance is a very, very large one, sustainable finance. A particular example is in this sector of water, where the current financial system doesn't work for regional and transboundary investments, particular topic of this session. It works for national finance, it works for subnational finance, but it does not necessarily work for the transboundary situations that we live in today across the world. River basin organizations, for example, lack access to capital markets. And this limits their capacity to fulfill their mandates for joint and integrated water resource management, which is critical when we look at the world today. Why is that? Roughly 60%, I heard the statistic yesterday, roughly 60% of the world's water resources are of a transboundary nature. And if we don't manage them differently than non-transboundary resources, we will be creating harm to the global water sector in general. Most of the potential water-related infrastructure, in fact, are transboundary and cross-sectoral and cannot be developed by a single country in isolation. Regional collaboration, therefore, on investment policies can yield economies of scale, especially when it comes to investments in such transboundary infrastructure such as dams, cross-border roads, navigation systems, or simply rail connections. But the process of mobilizing resources in the current financial system is inefficient and unequal, depending on the financial characteristics and capacities of the country in question. We need, therefore, a transformation almost and greater access to capital for local and regional non-sovereign entities in a way that complements the capital flow to national governments, not as a competing financial flow, but a complementary financial flow, and this is critical in most countries. In view of all this, therefore, I think that we need to concentrate on three potential solutions in three areas. First, since water really does not know any national or sectoral boundaries, we all know that, we need to acknowledge this in our financing structures and strengthen multi-stakeholder cooperation frameworks around water resources and provide financial incentives for integrated water resource management. Number two, we need to strengthen the governance and institutional capacities of non-sovereign or subnational entities such as local governments and river basin authorities, because these entities are often at the forefront of providing water and water-related services. And finally, we do need to join forces to create innovative financing mechanisms, including blended finance, completely overused term, but nevertheless, I will use it here as well, that allow public and private capital to come together and flow to create solutions. This wonderful Blue Peace Financing Initiative is one of these. It's working on these three different levels of action and offers a concrete example of how we can create new markets in sustainable finance and transform our financial ecosystems. The suggested mechanism here shows that we can support river basin organizations and other relevant non-sovereign entities to manage water resources, to access capital, and create a win-win situation. This is important not only for those entities, but for local communities and national governments who will equally benefit not only from better access to water-related services, but from strengthened local economic development. This Blue Peace Bonds Initiative creates a new market, and as a finance person, I'm particularly delighted by this, a new market in the sustainable finance field, and provides an impact investment opportunity for institutional and private investors. I think it is a very interesting model. I look forward to the discussions today, and I hope that it is one that can be replicated and scaled across the world and across sectors. I thank you.
Thank you very much, Usha. Well, I couldn't agree with you more that blended finance is an overused phrase, and perhaps innovative finance is also overused. I mean, the public and the private have been blending since the pyramids were built, I think. So it's not always you see things that are truly innovative, and perhaps there is something truly innovative about what we're looking at today. So within innovative finance, it's a real innovation. So let's now go to the next speaker, where we're opening, and in doing so, open the panel discussion, open the broader discussion as well. And I'd like to give the floor to Dauda Sao, who is the Secretary General of OMVG, which is the River Basin Authority. So who better to come next than you, Secretary General, to give us your perspective I mean, we've been talking about the river and the river basin that you are part of the management of. So really excited to hear what you have to say. The floor is yours.
Merci beaucoup. Thank you very much, Mr. Moderator. Ladies and gentlemen, distinguished panelists, dear guest, allow me to greet the Honorable Minister of Natural Resources and the Environment, of Climate Change and Natural Resources of Gambia. I wanted to, and also the Minister of the Council of Ministers who support us in the execution of the project of MVG. I want to thank the partners, UNCDF and the Cooperation Switzerland, for organizing this event today, the highest level panel, but also for the constant support that we benefit, in the context of the pilot project, Blue Peace for development of innovating financing mechanisms. So to go back to your question, indeed, the MVG gets its financial resources for this project, through a contribution from the 4 member states and for retroceded loans from the state. Indeed, there is no financial instrument that can channel the financing of the MVG in itself. So the financing instrument is slow, and there's a complex network of contracts and conditionalities, so it's inefficient. The example is the energy project that we're executing now, and member states have benefited from the trust of 8 donors: World Bank, BAD, the Islamic Development Bank, AFD, the IFW, African Development Bank of West Africa, and the Commercial Fund, and the counterparts of the states who are the member found the volet of interconnection with $722 million. And you'll see that at the level of the financing, we have 23 financing agreements to execute this project. So you will agree with me that the large number of the donors, creates delays in the execution of the work. Aside from the public financing, MVG is expanding access to commercial financing, for the funding of the hydroelectric, installations in a region that is at the border between Senegal and Guinea, and we want to produce 128 megabytes. Funding is 100 million euros, and to facilitate the installation of this funding, the portage is done by the Republic of Senegal, which shows the level of cooperation between the member state of the MVG with the guarantee provided by the state. So that's this quick description in relation to the first question, and I can come back to answer other questions. Thank you for your kind attention.
No, well, thank you. That's very enlightening, and I think we can maybe come back to you at some point as the session goes on. And you mentioned inefficient in lots of different funding streams and donors and countries. And I think another one of the potential advantages of this Blue Peace financing mechanism will be to somehow streamline some of that with this bundling that we aim to do. With that, I'd like to give the floor to Mr. Benjamin Powell, who is the Global Head of Sustainable Debt Capital Market and Head of Sustainable Banking for SEB Norway, a Norwegian bank. And Mr. Powell has 18 years of experience working with development finance and capital markets in the public sector, with the UN and IFC, as well as in the private sector with SEB, and has a background in product innovation, that word again, within local currency and sustainable finance. Local currency, that's one of my favorite terms. I think we always talk about bringing the private sector in, but it's not only going to be solved by bringing the global commercial private sector in. We have to look at domestic capital markets, building the reinvestment of domestic savings if we're going to solve some of these problems. So I'm delighted to see that phrase, local currency, there. And with that, it's my pleasure to welcome you to the panel today. And the question is, how can financial service providers support the creation of new markets in the sustainable finance field for sustainable development, water cooperation, and peace, with a focus on transboundary water cooperation?
Okay. Thank you, David, and hello, everybody, and thank you, UNCDF, for the opportunity to join today's discussion. First and foremost, I mean, not many of you may know what or who SEB is, so a quick bit of background and some context. I mean, we are I suppose, a leading financial institution in Scandinavia and Northern Europe. And I think rather than going into the sales pitch for SEB, I think the most important thing to mention is that we were one of the leading provided the lead in the development of what's called the green bond market. So something, when we talk about a product that is focused on sustainability and delivering finance for sustainability, in the case of the green bond on climate challenges in the world. Back in 2008, we worked with the World Bank and with the scientific community in terms of creating a model by which capital could be targeted towards environmental challenges and addressing these challenges. And I think in the context of the investment needs that we hear with respect to water and the kind of the $1 trillion needed to achieve SDG 6 by 2030, if we think about the work that's been done in the green bond market, back in 2008, when SEB and the World Bank and a bunch of Swedish investors got together to create this green bond market, it was a couple of $100 million. And it's taken about 15 years to get to the stage where we're talking about $1 trillion. So we can talk about $1 trillion. We can talk about this product as creating real scale, but it's taken some time. And in the case of water and peace, of course, we have less time in a way, but we do have, some structures and some ideas, if you like, and some innovation that's been used and put to good use, that we can get the financing and this, like, to be part of this $1 trillion need by 2030. So just important for some context there, really, in terms of our role. And how we think we can use some of that experience to address the needs of this Blue Peace initiative. So finance plays, or a financial service provider, if you like, a bank. I mean, what do? We're a communicator. We play this facilitation between the voice of the investor and the voice of the issuer or of the entity that needs the funding. And so really we have to try to basically play that role as a communicator. And in many cases, we have in this case, the Blue Peace Initiative, we have the impact, we have the financing need. We basically need to work to communicate that to investors, and that's how we get investors on board, communicating the opportunity, communicating the impact, and basically determining the success factor. And it goes the other way around as well, in that some investors come to us, they say, we want to have exposure to sustainable development goals. We want to highlight, we want to work with an institution that is addressing gender equality, for example. And then we go to the World Bank, we say, give us a bond, sustainable development bond with a focus on gender equality, and they can do that. So it is really this kind of the role between giving investors what they want in terms of impact and aligning their portfolio allocation, and then to investment opportunities presented by issuers, by companies, by institutions, by this type of initiative. So that's the role that we play. It's facilitating and really, being very active in terms of demonstrating, communicating the impact and aligning those interests. So I think that's probably where I'll stop for now. Back to you, David.
Okay. Thank you very much indeed. Yes, 15 years ago, 14 years ago, 2008, and we do have some quite significant progress since then. There is $1 trillion, there are the taxonomies now and things like that, but it's how we get that mainstream. We're, if you like, 20 to 30% of the way down the road, but we are running out of time. I think that's the kind of race that we're facing. It's not that the instruments aren't there, they are there now. It's how can we actually get them mainstreamed. And the next speaker is Douglas Jager, the chairman and CEO of Intrinsic Exchange Group. Throughout his career, Mr. Jager has focused on developing promising ideas into vibrant companies in finance, technology, healthcare, and media. Prior to joining the Intrinsic Exchange Group, he has founded and was the CEO or chairman of multiple enterprises, such as Entertaining Ideas, a media and idea incubator, which incubated Intrinsic Exchange Group, Amex-listed Sheffield Pharmaceuticals, TechSource, and many other companies. So a serial entrepreneur. My first question to you is, how can the value of natural resources such as water be captured financially and hence become attractive for institutional and private investors, whilst remaining affordable for the public. I'll add that part myself.
Well, first off, thank you so much for inviting me to be a part of this great panel. You know, I'm going to say something, you know, to frame this that's pretty obvious, but it's important, and that is, you know, the investors that we're speaking to need something fundamental, and that's a return on investment that is market rate. And if we're going to be able to invest in nature, and so if we think about water, the producer of that water is a stable climate, the forest, the other ecosystems that are able to exist above ground and in the soil. If they're not functioning, it's very difficult to be able to really address these problems at scale. So first off, I'd say that the design of the instruments that come in, be they debt or equity, need to be fit for purpose around those natural assets. And here, when I look at natural assets, I'm talking about nature, and I would say natural capital, but natural capital is not yet realized. They're natural assets that, boy, we wish were capital, because then they could be translated into the mainstream of the economy. And the capacities and characteristics of what we're looking at in, you know, financing nature directly are the fact that nature is intrinsically valuable. Its existence is something that we all acknowledge the value of. It's productive. You know, half of our economy is reliant or highly reliant on a functioning ecosystem. We look at the counterparty to that. We're missing what I'd call natural GDP, which is maybe $100+ trillion a year in goods and services that are produced that are not captured within our current financial system. And what we've been doing for a period of time is using the tool we had available, and that's policy, be that taxes, regulation, which led us to artificial markets, and we utilize philanthropy or voluntary efforts to try to fill that gap. And that gap is huge, as everyone in this room knows. So I'll explain, you know, what IEG is and the Intrinsic Exchange Group and why we came together to work on this. And our goal was to look at the fundamental underlying asset, and we created a new type of corporation. It's called a natural asset company. The natural asset company is chartered different than your traditional companies in that it is chartered to protect, to maintain, to grow, to restore the functioning ecosystems so that the quality and quantity of the asset, nature itself, and the production of ecosystem services can be maintained. Now, within that, we had to solve for a very fundamental problem. Most of the ecosystem services that the world consumes are free. They're a public good, unfortunately, that are free, and they've been treated as such. And so what we have put forward with our partners at the New York Stock Exchange is a corporation that will manage these assets under a different economic framework, a different reporting requirement. So those ecosystem services that are already monetized, or maybe in the future, that's your normal GAAP IFRS reporting. But we created another set of financials called Statements of Ecological Performance that would allow companies to consistently report on the flow of ecosystem services, the asset value, and key metrics of the health of the underlying asset. Short story, what we'd like to be able to do is those companies that obtain the rights to the beneficial ownership of the natural capital, production, not necessarily the land it can be, but those flows of attributes. We think about carbon and others, those are attributes, carbon sequestration or freshwater production are on that front end. And being able to then, with this framework, say that the underlying asset can be converted from potential to, in that transaction between a willing buyer and seller related to the metrics that I've talked about in our accounting framework, you're actually converting that asset to financial capital. And it's based on the underlying value of nature and its productivity, and the owners of it are those owners of that natural capital stock. And that is a public good. So we wrote into the rules, which almost exploded the heads of a lot of attorneys and those at the regulatory side, that there had to be benefit sharing written into the rules, into the charter of the corporation, so that those that are the owners and beneficiaries and stakeholders of natural capital would be rewarded financially as well.
Well, thank you very much indeed for that powerful intervention. Hold that thought, because I'm going to circle back around with some second mini questions. I'm going to start with you on what you've just said. But prior to that, I understand the Undersecretary General has to leave. So thank you so much for coming. We really appreciate your presence here.
Very much. Sorry. This is our life here. Event to event. Thank you very much. Thank you for your comments. I really
So we just have time. There will be a follow-up session, so we just have time to circle back, and I'm going to ask a couple of follow-up questions. I know many of the speakers have them in their speaking notes, but I'm not going to choose you all, given the time. But I'm coming back to you first, given what you just said. And a couple of questions. So at the recent LDC 5 conference in Doha, a number of governments were saying, look, we're sitting on all of this forest, but we're not rewarded for it. How can you fix that? And in fact, I think the representative of the PR of Gambia was one of the speakers that made that point very powerfully, and including in a couple of events that I was at. So back to you again. What do you say directly to governments like the Gambia? And we also had Bhutan, that actually has a legislation that they must, by constitution, I believe, or by some primary law, retain at least 50 or 60%, or maybe even 70%, I can't remember the exact amount, forestry cover. And I understand from LDC 5 conference that they are now looking through Parliament at watering down that law, because they feel that the development needs of Bhutan are not being met by their protection of the forestry cover, which would be a tragedy. But one can't blame them. But how can you, from what you've just said, any kind of further comments on the role of standards or the role of the type of mechanism that you've talked about in enabling not only things like the Blue Peace water finance for river basins, but also for forestry cover?
Sure. A number of questions embedded in that. I'll try to answer that. But, we're in discussions with a number of governments that have the exact issues that you're describing, where maybe less developed on the traditional economy, but rich in natural capital. And until that intact forest, that those, coral reefs, those mangroves are included in the ability to be monetized and converted from an asset to that, it's very, very difficult. So we hear this constantly. I happen to be discussing with Bhutan that exact issue. And so the way we've designed this is that value in the eyes of investors, they'll say, I ascribe X to how many acre feet of water are produced, how much carbon is sequestered. But all of these are kind of extractive in their nature and where we can realize them. But we should be looking at that forest for the good it produces for the world. And I agree. If and I've had this discussion with so many finance ministers, and they say, sure, we'd love to do that, but I have to develop, I have to provide livelihoods and fund all of these operations. How am I going to do that? So that's what this instrument was designed to address. So if we can convert that natural capital or that natural asset into real capital that can be invested into the type of sustainable programs, not only to protect what's there, but to provide the livelihoods and move in concert so that our options are not just extraction or some variation on extraction. That's what we're looking for.
Thank you. So now we really are talking about innovative finance. And back to you, Madam Minister from the Gambia, Your Excellency. So is Gambia up to this challenge? Are you going to be able to mobilize the political forces to be able to realize this? And the Blue Peace financing mechanism could actually be an example, not just of river basin financing, but of the kind of long-term sustainable financing the planet needs. That's a lot of weight on your shoulders. Over to you.
Thank you. I think yes. The short answer is yes. And as the opportunity presents in the Gambia, look at the nature of the country. We have a round belt of water and a lot of mangroves. Yes, we are losing them because of the economy has been pushed back to utilize them. But again, as I keep on saying, we have to demotivate people from using that source. And that can only be done if they have another option, because life must go on no matter what. So this is a very interesting moment that we're looking for opportunities. I want to comment on the complementary financial flow. That model is very interesting and needs to be also catch up. It's not all investments are only interested in accountancy returns. Some are interested in the economic returns, which is of sustainable development goals. That is key where we have to tap on. And the ideal is just the UNCDF model, where all is not money, but also having a good and healthy environment and also alive to live on planet is also a return on investment. And this is what the Gambia has. We might not have money, but we have something also to trade in to get money. That is where this opportunity that we cannot wait to tap on. Water is there in abundance that we have, but it has been underutilized seriously due to so many factors. Lack of the technique to do so, lack of finance to also innovate, and so many other loopholes that we can tap at the international market. Key among is the Blue Peace Bond.
Thank you very much indeed for that answer. So yes, the politicians are up to it. But what about the technocrats? I mean, one always hear, well, there's no capacity. And that's often used as an excuse, I believe, for not doing certain things, particularly when it comes to subnational level, transboundary level. There is capacity. Are we up to it? Back to you, Secretary General. Will we have the capacity through OMVG, through the states, the subnational entities, to be able to put this together? Over to you.
Thank you very much, Mr. Moderator. Yes, indeed. OMV was created in 1978 and with 4 countries, and you have seen that indeed the first project has already emerged since 2016, which is about to complete, which about 260,000 kilometers, which is a hydraulic dam in Samalo. So the mechanism itself need to be that's innovative. And we do know as well that looks into innovation and to set up the right environment to encourage transborder cooperation and indeed through development and planning jointly as also cross-border initiatives. In order to do that, particularly a joint investment, it's very important to set up a steering director, a pilot that has been approved by the 4 countries, which is why the UNCDF is supporting UCDF, is supporting the study. So we have Gambia, and Kulaba. So this about 18,000 meters squared. We shall then kilometers squared. We shall then finance certain programs as well as the legal process of the OMVG to ensure access to new financing systems and to access, and indeed through this cross-border collaboration, the setting up of a financing system that will have an impact immediately on the population and particularly in the reduction of poverty, food security, access to sustainable energy, to potable water and road infrastructure, as well as access to education and health. In this manner, will then increase access to additional pathways of resources, and in this way fight against, combat the rural exodus. I thank you.
Thank you very much. So we're going to have 2 more interventions, I think, on this first round of this meeting. So we will have time to circle back to the first speaker from the panel. And building on everything that's been said, but also building on your opening remarks about the Green Bond 2008, it was quite a long time ago. And yeah, I mean, we don't want, the future to say that, well, they had the solutions, but there wasn't quite the time. But that perhaps is where we are now in terms of the future for the planet. So how can we speed up? Can you help us speed up? The wheels at the UN and these projects, development finance moves very slowly. We've been talking about this Blue Peace Bond for quite a long time now. I'm seeing it in there in my indicators. It's still not issued. How can you help us speed up?
Well, I think, the key requirement, I mean, I've heard it a lot in the last day or two, is kind of how do we change the enabling environment to really get finance moving. And I think the key is to address some of these structural challenges. And again, that might be why things have not been moving, in that anybody who's worked on trying to get institutional investors in developing countries to deliver significant finance to projects in developing countries, there's always a reason not to participate. And so when you present to them an opportunity, which through an institution like IFC, which is basically taking the risk and providing kind of a AAA return or AAA risk in return, we still always kind of face challenges. We don't no liquidity. We don't do emerging markets. We again, that we don't like the rating. There's so many reasons to say no, and I think we do have the mechanism to get people to say yes. And I think if I use an example, which I think we can borrow from when it comes to the Blue Peace Bond, and that's an innovation we did at IFC called the MCPP. And in short, this was really to give investors the opportunity to invest pari passu with IFC on a portfolio of loans. And when we first presented this to institutional investors, they said, "Sorry, we just won't do that. Don't like the credit rating, or don't like the credit risk, and we don't like the illiquidity." But then, what we did then was we came back and said, "What about if IFC, and in this case it was Sweden, it was SIDA, who basically said, how about if SIDA commits to de-risk the loan portfolio and uses again a bit of a blended finance? I don't want to overuse the term, but it was exactly that. It was essentially using grant from SIDA to de-risk the portfolio alongside IFC's own risk budget, and then basically that gave an uplift to the portfolio of projects. And suddenly then we had AXA, we had Prudential, we had large-scale insurance companies coming to participate alongside us in that. And I think I'm somewhat disappointed in that has not been scaled up massively, but I think that at least is the model by which we can get, again, institutional investors, comfortable with the risk. And I know that we have sovereign and multinationals willing to work with us on that type of solution. And I think that will help us a great deal. De-risking and providing that kind of credit rating uplift that makes institutional capital start to move.
No, exactly, and that's partly why guarantees are so important and why we're so grateful to European Commission. Marjeta is here with us for the Sustainable Development Plus, and the part of the guarantee will be this sub-sovereign guarantee we hope to be able to deploy in this case with the City Guarantee Facility. So I think we have time for one intervention from the floor. I understand that UNECE would like to intervene. Is their representative present? Please, the floor is yours.
Okay. Thank you, ladies and gentlemen. Good afternoon. So I'd like to first thank UNCDF for inviting UNECE, which serves the Water Convention, to partner in this important site event. As we all know, transboundary basins require coordinated management and sustainable development to protect and use equitably their shared water resources. the lack of sufficient and reliably available financial resources often puts this at risk. Some reasons for this lack of funding are related in some cases to the limited consideration of the benefits of cooperation, the perceived risks related with economic development, political stability, which can often be seen as higher in basins shared by several countries, the financial capacity constraint faced by a number of countries, and also sometimes, as discussed today, the impossibility for regional organizations like RBOs to access certain types of financial mechanisms like market capital. The necessity to allocate money to transboundary water cooperation processes and activities at basin level is therefore critical to maximize the benefits of cooperation. Having strong legal framework in place, such as the Water Convention, as well as institutions, is key to build an enabling environment to attract financial resources, investments, and maximize the benefit of transboundary water cooperation. Recently, the Water Convention Secretariat developed a short brief on how to accelerate financing and funding the transboundary water cooperation and basin development, which features the key opportunities and challenges related to the different sorts of funding and financing which can be mobilized for cooperation processes and water-related activities at basin level. The Blue Peace financing, which is featured in it, is certainly one of the interesting and innovative financing options that river basin organizations have now. The Water Convention Secretariat strongly supports the Blue Peace financing initiative and believes that unlocking public and private capital to transfer water cooperation frameworks into investment platforms through innovative blended finance mechanisms and financing instruments is an opportunity for regional entities such as RBOs to access the needed financial resources and strengthen cooperation. We look forward to continuing our collaboration with UNCDF by supporting, as the Water Convention Secretariat, countries and RBOs in strengthening their cooperation, institutional framework, and agreement to be able to benefit and manage financial mechanisms such as the Blue Peace bonds. To finish, let me take this opportunity to inform you that on 5th and 6th December of this year, UNCDF, together with a number of IFIs and other partners, including UNCDF, will organize in Geneva a global workshop on financing transboundary water cooperation to discuss more in depth this issue of financing and allow a dialogue between the finance sector community and the transboundary water community. We would like especially to encourage finance sector representatives to take part in these discussions foreseen at this global workshop, as they have a role to play in further supporting transboundary water cooperation processes and activities at basin level. Thank you for your attention.
Thank you very much. So I'm going now to hand the floor over to Ms. Åsa Knudsen-Stedt, again from the SEB, who will now moderate the second panel, which is really the donor side chat about how we can mobilize development partner finances for this kind of initiative. So over to you.
Thank you very much, and thank you for inviting us here. And as we hear, so sufficient finance is lacking to these projects, and to create these new markets, we need the private capital for this to appeal to the private capital. And ever since we brought the idea of the green bond to the market in 2008, we have had thousands of discussions with investors. So we believe we kind of understand now what is required to mobilize this private capital. And it's obviously about risks, but not only the financial risks, it's also about the headline risks. And I would like to pick up on what Usha said. It's about the financial incentives and to strengthen the governance, and then we can join the forces on public and private blended finance. And that means that there needs to be this financial proposition that is appealing enough for the private capital. But equally important, we have the governance platform that needs to be in place. And that needs to address the headlines risks. So it's child labor, corruption, social issues, greenwashing, geopolitical risks. And that's particularly important now when we discuss the transboundary waters. And the third one is there needs to be a trustworthy partner with a technical expertise on the ground that can kind of ensure this governance platform to provide the comfort to the investor. And this is kind of the UNCDF that comes in as this trustworthy partner. And if we can provide all this, we can educate the investors. And if they start to understand and appreciate these kind of investments, they will also come to the market and seek higher risks and then provide even more capital. And to discuss this, it's the privilege to have both the German government and the European Commission here to discuss these topics. So starting with you, Tanja Rödiger-Warburg, Deputy Director, I read here now, so for the Federal Ministry for Economic Cooperation and Development, BMZ in Germany. And I understand you head the Directorate for Global Health now and have a long experience. So what would you say, how can the national governments and regulators as donors support the creation of new markets? And can you also give some examples on what you support? And
Yes, thank you so much, and good afternoon to everybody in the room. So it's exciting to hear what is going on, and even though it takes sometimes 15 years, it happens, and this is the good news. And when it happens, there's also a need for the political window, and I think with this conference, it might be a push into the right direction. So what I think, and you already named it, it's all about trust. And trust is very strongly linked to risk, de-risking. And this is why we have innovative instruments which try to instrumentally de-risk and promote trust in that sense. But I think the main action from governments and from regulators is to think about how can this trust as a key issue be promoted. So national governments and regulators and donors should, from our perspective, evaluate how this trust can be created. And I would like to name some examples what we think are key elements of this evaluation. So we need a very clear and transparent reporting, and according to standards, and the potential investors require this. I don't know how it is in the world overall, but we in the European Union are working on these kind of standards, and I think when the ESG regulation is done, then we have the first important step to somehow go this pathway towards standards. There has been still some things to elaborate, but I think this is extremely important, and when you step 15 years back, nobody would have thought about that we are working on these kind of regulations in the European Union. So the second is to set up an enabling regulatory environment with clear and transparent rules for investors, which do not change every second year, because investment is a long run. Negotiation with the governments, with investors, everybody who has been in this business knows this takes some time and it's quite costly. So if the regulation is changing, then the market will not develop. They will move on to other countries. And the third is supporting water utilities is central from our perspective. To support them in their financial performance is important for investors because this is a credible business case. So you asked me about some examples. What are we doing? And I will give you some short insights about it and make an advertisement. Because today, Germany, together with the Netherlands and other partners, we will launch the Urban Water Catalyst Initiative. And here on this conference, and we are very happy that we can manage, even though all budgets are under stress. But we managed to get it released for this conference, and we will launch it today. So what is the objective? The objective of this global initiative is to support reform-minded urban water utilities in achieving their creditworthiness. So this is a tricky instruments we have set up. There are some technical components, technical support and financial support, and this is a kind of a chain with different bits and pieces, and lacking gaps should be overcome, like financial flows in certain times on investment where these companies have problems. So I hope for others to join in this financing, because of course we are looking for others to co-finance this new fund. And this means that we concentrate from the German government with one of our main pillars on urban water utilities, and to make them financially and technically strong, because this is a key instrument for access for people, for poor people, and for companies to get good water. So what are we doing? We are financing this for a start now. We are 32 million in this year. This is a seed funding from the German government, and the Netherlands is joining up, and we hope for others to come with us. Second example is an example in Tanzania. The investments financing facility finances and implemented by the German government through our bank, the KfW. You all know them. It supports urban water and sanitation utilities across the country, and in order to expand access to water and sanitation, so the same issue. And these utilities are supported in accessing also domestic commercial finance from bank to make them financially strong. This is what we are aiming for, and to link the water sector so better to the financing sector, and to unlock domestic capital for water investment. And let me give you a third and last example. It's about last year. On behalf of my ministry, the BMZ and the KfW, we have provided a 500 million euro loan to the Indian Ministry of Finance, and this loan was granted for sustainable and climate resilient urban development, again, in the state of Tamil Nadu. The funds are passed on to the municipalities of the state via the Tamil Nadu Urban Development Fund, so the Indian fund, which is correlated to us, and the funds are used for projects to improve the climate resilience of urban infrastructure. So you see, all this is part of a big picture. It's the story of climate change. It's the story of getting access to water and sanitation for huge groups of people, and adaptation to a good, resilient infrastructure in the urban context. With this, some example from our cooperation, I give back to you.
Thank you very much. So turning then to the European Commission here. So we have Ms. Marjeta Jager, Deputy Director at the EU Commission, Director for International Partnerships, but has also been into other DGs before that. So we hear that the contribution of the European Fund for Sustainable Development for the Blue Peace Financing Initiative strengthens this credit enhancement for the Blue Peace Bond via this first loss structure of the partial credit guarantee. And we also heard the importance of that for the IFC example, as Ben said. So can you tell us a little bit about this structure, and also why you believe these kind of structures and the risking mechanism are so important for unlocking the private capital to get this joint venture and blended finance?
Okay. Thank you very much for your question and for having me here on behalf of European Commission. First of all, I'm very, very happy to announce that we are proud and happy to allocate up to 154 million in the guarantee capacity of UNCDF guarantee facility for sustainable cities. So that tells you that we are a huge believer of the success And also we believe that this facility will, with the Blue Peace Initiative and Blue Peace bonds, that is fully in line with our objectives of the Team Europe initiatives of transboundary water management in Africa that we are launching this afternoon. And I have opportunity to invite you all at 6:30 to the event, is something that will contribute to the financing of transboundary systems that is lacking financing that we had before. Also now to announce that I'm sure you know that from the same fund we are also going to contribute 120, I think it's 112 million to the Urban Water Catalyst Fund, so to the initiative just announced by Germany. And why we are doing that? Basically, the European Union and the Commission as the major world donor, we've been very active in providing support in water sector for many, many years in billions in last MFF, and it was mainly in grants. And we realized that we will never catch up, the gap is too big, and that we need to go, not that we like banking and innovative finance, but it's simply the recognition, if we want to go from billion to trillions, we need the private investment and to basically implement the SDGs. And that's how we started to learn that we can use the blending finance, for example, with the investor, climate investor, that it goes now to climate investor 2, that tend to be a success. Where we do the first loss, the development banks, they do the second loss, and the private sector goes for the third loss, you know. So basically they have no risk. And we are doing the de-risking, and that's how they are coming in, is something that we can basically help to de-risk and to mobilize investment under so-called global gateway strategy, that it's now our EU strategy to global investments and to basically narrow the gap in the investment that is needed. And that's why we believe we have this EFSD plus guarantee, quite with a portfolio of almost 50 billion euros. It's a lot of sovereign, but also the open architecture, where mainly European development banks, but also other partners. And that is my second message to all of you. We are partnering not only with IFC, but we are partnering, as you see, with UNCDF, because we put the trust in our partners that this is something that as a regulator and as a Commission department, we show also to the market that there is not such a risk if we partner together. And basically we can talk about, you know, the whole suite of guarantee products that we are now proposing. We are going into the equity investment in projects, first loss investment in structural funds, then, for example, loan guarantees, and even the backstops for the offtake agreements. And I think that we can move from the energy to water when it comes to that part as well. And we are really looking forward to partner with all of you, because the needs are huge, the gap is huge, and especially if we want to realize the SDG 6, and especially SDG 652 on transboundary cooperation, that it's a key element of the EU policy. I mean, we need this kind of, I would say, innovative, sometimes risky for us, not only in terms of money, but also reputation. But that's why, you know, we have trust together with our member states and our financial institutions, especially our bank, EIB, to go into that direction. I hope I explained a little bit what EFSD Plus is, and that you can find the European Commission as a trustful partner in this endeavor. Thank you very much.
Can I just take the freedom to follow up on that? Because, I mean, because these de-risking mechanisms are kind of instrumental for unlocking the capital. But also, as you mentioned, before you engage in this project, you must do a very thorough due diligence, because going back to the governance issue, that provides also a lot of comfort to the other investors. And is that something that you could kind of share with the investor community? So, because then they don't have to do it, because you have done it all. So if they trust you and you trust these organizations.
Yes, as you may heard already, we do some kind of pillar assessments on certification and due diligence, if you want. We are working with the transfer institution, European Development Banks, but also international partners that are certified. And of course, you know, that gives us the all trust that then on the second level, they will do the due diligence with their partners as well. But I think that this is how we are doing the de-risking. And I mean, but for water and sanitation, I think there is much more potential there because we are talking about long-term investments. And for example, we have so many pension funds there with the pensioners like us probably one day, you know, looking for the long-term profit and also, you know, investing in sustainability. So this kind of trust and I would say the due diligence that needs to be included, as it was said before from my Norwegian and I don't know where you're coming from, but American friend probably. I mean, is something that as a regulators we can give to the private sector in order to come with us, you know, in this so-called very risky operations. But I think that we are going into that direction and that the train is unstoppable now, that this is something that we all owe to the Mother Earth, and water is a source of life. And I think that today's conference is something that can absolutely contribute, that this will not be a reversible process. I've been talking to the World Bank today. They said, you know, you are naive, you are doing something that we tried and we failed. And I believe that there is a potential, and I trust in private sector that this time we are not going to fail. Thank you.
So thank you very much. So I guess I leave over for some concluding remarks to the chair again.
So I presume that's me. So thank you very, very much, Rosa, and thank you very much to all our distinguished panelists. I think you've brought forward a very complex debate and a complex financial montage into a lot more clarity. And I think it's a clarity we need in order to make our commitments. If I may, and perhaps departing from my remarks, David, so I'm really sorry, but I'd like to see this as an instance of a renewed multilateralism, the renewed multilateralism that the Secretary General talks about, which brings together multilateral institutions, whether they be in the UN or, say, in the European Union, together with bilateral partners, together with multilateral sort of organizations such as the OMVG, and bilateral partners also in the country, to work with innovative instruments to develop sort of for a new vision of development. And I think it becomes very, very important. We're seeing an example of that. I think the fact that we have the financial sector joining it is an immense boost, I think, to this new multilateralism. And I don't believe we can see multilateralism only of governments or only of institutions, but one also where all parties come together. So with that, I'm very, very proud to be able to announce a commitment, a voluntary commitment by UNCDF for the Water Action Agenda, which is the Blue Peace Financing, investing in peace and sustainable development through water. I would also like to thank all our partners in supporting with this. If I could just go beyond and perhaps a comment on my part, there's a missing element there. And the missing element est l'élément que vous avez soulevé vous-même, Monsieur le Secrétaire Général.
The one that Secretary General that you already talked about, a local and that can not only share in the resources of the water, but also investments to realize the SDGs. We cannot consider development without thinking of placing the center human life and humanity, and we cannot take them into account without listening to their voice, and it's their voice which is our commitment. That is the voice that we would like to hear in the Gambian Basin. I thank you.